Hey everyone, very good evening. I hope the audio is clear and also the display is visible. Can you guys quickly confirm, can all of you see my screen and can all of you hear my voice clearly? With that note, I will be able to start my session. So please confirm using the chat option. In YouTube, you can use the live chat, and in Discord, you can use the chat option available at the right top corner. So please confirm, can all of you see my screen and hear my voice clearly? I hope, just give me a minute. I think yeah. Thank you so much, Satish. Yeah. So let's quickly get into the subject. It's a quick disclaimer that any information that I'm going to discuss from now onwards is going to be an educational purpose information only. Don't consider it as buy or sell recommendation. So any investment decision that you make or trading decision that you make are subject to market risk, and do thorough research and then take the effective decision. So let's quickly get into the subject. So today we are going to discuss a few of the indicators, but anyway, I have just a moment. Yeah. So I wanted to know from your end. So what exactly, like no, which of the indicator that you want to understand in Bookmap? So I want to make this particular session as an interactive session, so that way we will learn effectively. So which indicator that you want me to talk about? So I'll be talking about crude oil also today. So because it's in a live market, so I'll be talking about the crude oil, and also we'll also discuss about the Nifty and Bank Nifty. But from your end, I want to understand what indicators or what information that you are expecting me to explain today. You can use the chat option to interact with me. All right, so just a moment. Yeah. So basically today I'll be discussing about the context. So in the first step, we will be discussing about the context of the market, in which way we want to trade, and basically what is the location where we can look for the trading opportunities. All those things comes in the first place. And then I'll be discussing about three important indicators for today's session. One is of cumulative volume delta that you are seeing in the screen, that at the lower end, like RSI. So it's not an RSI, so it's basically a cumulative volume delta, which is calculated by the order flow information. So I'll be explaining about this indicator today. And also the bar indicator that you are seeing here is basically called as footprint indicator. Basically the footprint indicator recently introduced by Bookmap, so that I will be discussing. And also the indicator that you are seeing here, the one which is indicated by the number, so that also I'll be discussing about it. It's called as an absorption indicator. But before we understand what exactly these particular tools are, we need to understand a context, or basically I call it as a framework. At any given point of time, to have a clear idea or to have a clarity in our decisions, we need to have a framework, right? So in that particular case, I will explain that in a quick manner. So basically I follow a framework called as TLE, right? So what it means is that in the first step, we are going to define the trend of the market, not using this particular indicator, but basically using the price itself, in which way the market is trying to move. That's the basic question. So ideally, if the market is making a progression in making higher highs and higher lows, if the market is moving in this particular fashion, we will consider the primary trend as uptrend. If the market is moving in the downward direction by making lower low and lower highs consistently, so in that way we consider the entire market trend as negative trend. So in other trend is basically if the market stays within some tight range, then we can call it as a sideways market. So once we understand this trend, All it takes to align with the trend. It's as simple as that. For example, if we identified the primary trend as an uptrend, so either we look for the break of last swings, so basically breakout trading that we can say. So we try to align with this trend by either the breakout or the pullback entry. So whenever market approaches to the last support, so we will try to anticipate the buy trade over here, considering the primary trend is in uptrend. And similarly, if the market is moving in the downward direction, we will consider to short the market either to the break of last lows, or when market takes the pullback to the last resistance, we will try to short the market. If this is clear to you, this is a basic funda. Once the trend part clear, and second step is to identify the location. So we know in which way the market, in which way the market is moving and in which way we need to take the trade. But where we have to take the entry and where we have to exit, or where we can basically monitor the price action, right? So that is what the second step is all about, where we will identify the immediate support and resistances, so that when price approaches to that particular level, we will try to monitor the order flow information. This is the second step. And third step is where we will consider the bookmap tools, or basically the order flow tools, in order to take the decisions. So this is where we get the entry and exit triggers. I hope this is clear. This is a basic context or the basic framework that I follow. And if you have any particular questions on them, so basically you can ask them whenever I go to the Q&A session. How to decide on tick size for various instruments? Satish Shetty asked a question. So I'll definitely come to that point when I discuss about the settings of footprint. Okay. So now with this information, if this is clear to you, so let's quickly look into the chart of Nifty. All right. So this is a Nifty chart. Let me just a moment. Yeah. So by just looking into the chart, we can clearly understand. Okay. So that market is presently trading within this entire range. So we call it as a bracket. Okay. On a broader picture, so market is presently trending in the range bound within this particular range, and present it is at the near to the range high. So at any given point of time, it is a good opportunity for us to short when market approaches to the last resistance by targeting to the immediate supports. This is one of the context. Okay. And second, let's check out the Bank Nifty parallelly. Bank Nifty is telling a different story, because as we can see here, market was trending in the range up until today's market, but market today broken out the last range and price is surviving. That means price is still sustaining above 42,800. So which suggests the more the time spent above this particular resistance is basically a good sign for longs. All right. So by any chance tomorrow, if market closes below this and again market falls to trade below this particular level, then we can look for shorting opportunities by targeting the lower levels. So this is exactly what I call it as a understanding of the trend. Once this primary direction is clear with respect to the price action, then we will move on to the next step, is to identify the immediate support and resistances, so that when prices approaches to those levels, we can monitor the order flow information when it comes to the part of entry and exit. So I'm not going to change anything over here. 42,800, I'm going to keep it as it is. So basically that is where the major resistance was, and again market is, if you observe closely, just a moment, if you observe closely, market is taking a support at the present moment for that particular level. So the last this is where we have a support, this is where we have a support level. So at any given point of time, if we get the shorting opportunities tomorrow, we can short if the price sustains below this particular level by targeting these supports in the Bank Nifty. Or if market again sustains above this particular level, and if it starts to break the last swing high, then we can immediately look for long opportunities by targeting the immediate resistance, which is there at 43,554 level. Similarly, the Bank Nifty, definitely it is presently trending within the bracket. As we can see here, this is the tight bracket. At any given point of time, if the market has to trade in the above direction, for any positive momentum, price has to break this particular level, which is 18,223 or 225 roughly. And if that happens tomorrow, so then immediate resistance is at 18,330. Or if markets fail to trade at this particular level, or suppose let's say market approaches to this level, and again it failed to break this particular level by sustaining again or falling back below the this particular resistance, then again we can look for shorting opportunities in Nifty as well. Okay, so this is where we understand the context and we identified the locations where we can look for monitoring the price action and order flow information. So if this point is clear to you, then we can move to the third step where we will try to monitor the order flow information. Right now, since the order flow, since the crude oil is active, that's why I'm considering it's not a CPR indicator, Arshal. So it's footprint, basically the bar chart that you are seeing here, right? So basically the column kind of information is basically called as a footprint chart. And I'll explain about it. Don't worry if you are completely beginner to it. I will give you the immediate glimpse of it, and then only I will discuss about the advanced concepts. So I will definitely come to that point. So right now I'm looking into the crude oil since it is in live. So if you look at the Nifty information today, it looks something like this. Okay, so basically, just a moment. Yeah, when you open a Bookmap chart, right? So by default you will not see all these indicators. So I will disable everything. Okay, I'll disable footprint, absorption and everything. So to give you a basic idea of what exactly this indicator is all about, is basically the green and red line that you are seeing, right? So basically this red and green line are nothing but the best bid and best offer available at the present moment. So what software does smartly is that it stores the data and it gives the structure of the best bid and best offer. That's why it's called as a BBO indicator, best bid and best offer indicator. So what is the use of it? Okay, the main use of it is the main application of this particular indicator, or the use case, or we can say advantage of this, is basically if I enable the candlestick charts. Okay, so right now this is the 15-minute candlestick chart. By just looking into the candlestick chart, we will be able to see where the market opened, where the market closed, where until what price it has traded, higher level, lower level. So basically OHLC data. But we don't get to see what is happening within the candlestick. That's where the BBO indicator helps us to identify the price pattern within the candlestick. Since, see, I want to remind you this is not an executed price. So the bubble that you are seeing is basically an executed volume. So I will come to that point later. Now these lines are nothing but the best bid and best offer available at that particular point of time. So definitely this will change according to the demand and supply, right? It's nothing but the price, right? If the BBO indicator is increasing, it's similarly that one or other way the price also will execute in that particular way. So that's the basic advantage of BBO indicator. It helps us to identify the structure of the price within the time frame, selected time frame. Right now this is a 15-minute candlestick chart, but you can see there is a pattern within this. So what is the use of it? What is the advantage of it? The main advantage is that the delays that we get, usual delays that we get from candlestick entry and exits, that can be avoided because it gives an immediate structure, the price structure within the candle. You can get into the trade way before earlier the completion of the candle, and you can get out of the trade before confirming the or without confirmation of the candlestick itself. So that's the basic advantage of using this particular tool. All right, this is clear to you. If this is clear to you, then we can move on to the next point, which is, let me disable the candlestick charts. So the next point is the volume dots. You can see that you can control it from here. The moment I enabled it here, you can see the bubble kind of a chart over here. What exactly it is? There is a concept called delta. Okay, so let me give you an example so you will get the clarity of it. What exactly delta is all about? At any given point of time, market, there will be a market buy orders, there will be a market sell orders, right? So that's what moves the market, right? It's not the passive orders that moves the market, it's the market orders which is placed aggressively that moves the market up and down. So order flow, any order flow software, so basically any footprint or order flow software, what it does is it takes that executed information and it bifurcate to as a buying volume and selling volume. All right, this is point one. So what is delta? So for example, at any specific point or price level, assume there are 10 market buy orders and at the same time there are 20 market sell orders. Okay, so the delta simply subtract the buying volume minus selling volume. So how much is it? It's basically minus 10. So at that particular price level, even though there was a market buy orders, market sell orders, but ultimately the overall delta of that particular price level was minus 10. That means the market sellers were more at that particular price level. All right. How we can use this information, we'll come to that point later, but we need to understand how these particular things are calculated. So this is called as a delta. First thing that we understood is that any information that is shown in the footprint or order flow information is nothing but the market executed orders. It differentiates the buying orders, selling orders separately, and then this bubble indicator that we are seeing here. Okay, just a moment. Yeah. So it's basically sorry. So volume dots that we are seeing here, by using this, one thing is that we can see whether there was a buyers or sellers in terms of the aggressiveness. Market buy orders were active or market sell orders were active. And second important thing is that we can get the relative difference between them. For example, let's say if you compare this bubble and this bubble, even though they are same in the color, that means the market sell orders were active, we can clearly see at this particular price level there were more market sell orders. That's the reason we are seeing the bigger bubble comparing to this. So one is that we get the delta information, and second important information is that we get to see where the maximum number of transactions. That's the first information, and second information, we can relatively differentiate what is the buying order, what is the selling order. So that's the basic use case of this particular indicator. So don't worry about this, how we can use this information and how we can combine this information. I'll come to that point definitely. So try to understand what exactly the meaning of these indicators. All right. So if this is a bare indicator, so once you open the software, you'll be able to see the BBO indicator and volume dots, and also the line information that you are seeing here. Okay. So this is nothing but the cumulative volume delta. Okay. As the name implies, it is a delta information, but cumulatively calculated. What I mean to say, for example, let's say the last price level delta was 10. That means market buy orders were active, and immediately for the next price level or next transaction, assume there is 10 more delta. So last 10 and present 10. So how much is the total cumulative volume of this? Basically 20. So it is very clear that with this calculation, as long as this cumulative volume delta falls below, or it trends below, that means there is an aggressiveness, there is an increasing aggressiveness in terms of the sellers. Okay, so more of market sell orders are getting executed in the market. It's as simple as that. Similarly, if this particular line is increasing consistently, more of the market buy orders getting executed in the markets. Okay, if this point is clear to you, then I will introduce you to the one more indicator, and then we will see how we can utilize this information and take the effective decisions. All right. So I will enable that. Go to the configure add-ons, and you can see there is a footprint. All right. So basically footprint is also nothing but the market orders data, but it gives the different graphics, point 1, and point 2, it gives the different perspectives. So I'll discuss about that point now. So basically, if I enable the footprint chart, I will quickly discuss what exactly the setting that I'm presently using. First thing is the footprint bar type. This bar is nothing but the footprint bar. Okay, so I'll zoom in and I'll show you. So this bar is nothing but the footprint bar. So what type of bar that we want to plot? So right now I have selected as a time interval. Since I am a price action trader, so basically I look for the candlesticks, right? So candlestick behaviors. So in that particular case, I follow a 15-minute chart. So hence I'm using the 15-minute interval here. So it's a straightforward thing. On what basis we need to calculate the footprint bar type. So right now it is based on the time. So every 15-minute new bar will be formed. Point 1. So there is one more thing, reversal. Okay, so this means, for example, I have given it as a 20. So consider it as this is the default setting that is given. So when reversal ticks is 20, what it means is that how software thinks is basically, for example, market is moving in the upward direction and suddenly there is a 20 points down movement. So at that point of time, the new bar will be formed, the footprint bar. Okay, and similarly, there are two more thing. So range means basically using the tick size. So for example, 20. For every 20 points movement of the market, new bar will be formed. And similarly, volume. So it's a straightforward way. So if we can give 5,000 volumes, for every 5,000 volume orders, the new bar will be formed. So by default, I'll be using the time interval itself, because most of the traders use it for the time interval purpose only. Because for example, let me give you an idea. So for example, let's say you are monitoring 15-minute chart. Okay, just a moment. So assume it's a positional thing, though that's why I'm considering it as 30 minutes. So you assume that you are monitoring the price action in 15 minutes, and considering that, for example, let's say you want to take an entry here. Okay, so at the break of last swing high, you want to place a buy order. So by just looking at the candlestick chart, we will only be able to see OHLC, but the information that is available, for example, let's say at the present moment it is again breaking, this is a hypothetical example, it is assumed that it is breaking a last day high. Okay, so we want to see what is happening with respect to the orders within this particular candle. So that is where the order flow, that is where the footprint will be a handy tool to utilize the information, where we can validate and invalidate our trade setup. What I mean to say, for example, just in this particular case, assume this is your critical level. Okay, this is where you want to take an entry. Okay, so now the bar has formed. Bar will show three important information. First thing is that it gives us a profile. Okay, in terms of the overall last 15 minutes, what was the volume profile? For example, in this case, you can see this is a profile. So with that, we can clearly see this is the price level where maximum number of orders got executed in that 15-minute, point 1. And point 2 is that we can clearly differentiate, the software differentiates whether it was a market sell orders or market buy orders based on the delta. So in this case, it is showing it as a red color bar. That means at this particular price level, more of the orders got executed. And second point is that most of them were the market sell orders. So that differentiation you can clearly see here. The left side 30, that means 30 market sell orders placed here, and 5 market buy orders. So that means more of the market selling activity is happening in this particular level. So now we want to get into the trade. Okay, so assume in this particular case, after completion of this particular information, we will be able to see this information, right, where the maximum number of orders happened and what is the behavior of those orders. So using that information, we can validate and invalidate our trade. Assume in this particular case, so market is breaking. Okay, but now price is not sustaining here, so price is falling, and again market sell orders, more of the market sell orders placed here. So which means what? At any given point of time, if I want to opt for a long trade here, price has to sustain above this particular level. All right, so until price sustains above this particular level, it's not a good idea to buy the market, because there are more of an aggressive sellers are sitting here, and we don't want to take risk against to them. So this is the one of the way that we can utilize this footprint chart. So ideally, footprint chart can be used. This is how basically I utilize this information. So I use it in a time interval basis. So whenever there is a trade setup, so I just look into the information, what is happening with respect to the volumes, and then I'll take the decision. So I hope this point is clear to you. So that's how we can use the footprint chart. Okay, so further settings I will discuss about it. So time interval, I hope this is clear. Bar width is nothing but the graphical representation. You can change this. This is nothing but the width of the bar. So if I change this, you can see there is a difference. So by default, it is 80 or 100. So you can change this according to your need. And then horizontal smart scaling. So this is highly recommended to enable it, because whenever you zoom in, zoom out, so automatically it will be scaled. And then we have a histogram delta plus and minus. So this is where, the earlier the information that we have seen is basically the bar type, but now we are seeing the background type. So the coloring, the shading of the footprint information, how you want it to be. So in this particular case, histogram delta plus and minus, right? So in that case, we will be able to see the delta information, and also we will be able to differentiate the buying and selling volume. So that's exactly the histogram delta plus and minus does. If I give the only histogram, it gives a plain volume profile, and it shows the volume level where maximum number of transactions happened by the dark green color. So there is a differentiation. By default, I use the histogram delta plus and minus because we will get the difference of whether there was a buying order or selling order. So that's why we are using the delta plus and minus. So there are histogram delta, diagonal delta plus and minus. So this gives a different graphical picture where we will be able to see the delta information, but diagonally it is confirmed. So for example, right side buying volume separately, it shows separate volume for buyers, separate volume for sellers. So similar goes to histogram buy and sell. So basically it is a buy and sell information, but again on a histogram basis. And then full background single color. So basically, as the name implies, it shows complete background color, full bar of background color. So it's a plain similar to the profile, but we will be able to see the complete kind of a bar. Then background delta plus and minus, similar to the plus and minus. So we will be able to see the overall graphics of the bar here. So the ideal way to look at it is histogram delta plus and minus, because here we will be able to see the profile of the volume, and second we will also be able to see where the in terms of the orders, how the orders are behaving. So all this information can be seen here. So that's why I'm using histogram delta plus and minus. And then this positive negative color, all those are appearance settings, so that you can change. Use shades. So this is one of the critical settings, so you can make it enable. So basically if I disable it, I'll not be able to differentiate the magnitude of the volumes. What I mean to say, if I enable it, I'll be able to see the more of the orders executed area is displayed as a dark red color. So even though it is a red, it is shown as a dark red color. So I will be able to see the difference clearly. So that's why it is recommended to keep it active in terms of the shades. Okay. So transparency factor, it is a visual factor. So you can change the transparency according to your need. And footprint type. So earlier example, right? So this particular thing was for the graphical representation of the bars. This is for the text. Okay. So right now buy into sell means we'll be able to see, you can see this is the text, right? So text information, buy into sell information will be able to see. If I give the sum, so entire summation of the volumes for that particular price level will be calculated here. And similarly, horizontal delta. So basically the delta information will be able to see for that particular price level. And then diagonal delta. So we will be able to see buy and sell separately as a delta volume. So buy into sell gives us an idea. The moment you see, you will be able to see in this particular case 2 where the market buy orders, 26 where the market buy orders, 2 where the market sell orders. So obviously in terms of the delta, market buy orders were more active at that particular point of time. So this is the earlier example for the bar. Now the information that we are seeing here is basically for the text. All right. The main important setting, I think Satish Shetty has asked this question. So how to decide on tick size for various instruments? So right now for Nifty and Bank Nifty, it is recommended to keep it as a tick multiplier. Right now I'm keeping it as a 2 for crude oil. Okay. How to decide on it? So again, it depends on an individual instrument. For example, some instrument, require 1. Okay. So by default, you can change this particular information based on the appearance of the setting. So for example, if I keep it 1, so it will be cluttered a lot. So in that particular case, if I try it with 3, so the information will be clear, but it is not, that, clear information. So in that case, I'll be able to keep it as 2. For Nifty, I'm using 3. For Bank Nifty, I'm using 6. So that we will be able to see the clear graphical representation of the footprint. So that is the ideal way. So you have to do little trial and error around here, and then you can, change the multiplier according to this. So how this particular information is important is because, see, whenever you subscribe to an instrument, right? So if I add an instrument, when I'm adding an instrument, it will show, right? So tick size by default it is 1. So if you want to use the information of footprint, it is recommended to keep it as 1 for Indian market. So while subscribing to the instrument, which tick size that you have selected right now, considering the tick size is 1, again I'm going to go to the setting of footprint, and in this case I'm using a tick multiplier. So in simple words, This 2 means this multiplies this 2 number with the tick size that you have selected. Considering that you have selected the tick size as 1, the tick multiplier will be 2. That means 2 multiplied by 1, 2 is the point. So where this particular information is used? This is used in defining the price difference between the individual rows or individual columns that you can see. So for example, assume this is a 18,000 level. This is an example, 18K, and this will be 18,002. So this difference will be calculated based on the multiplier that you have selected in the setting. So for every 2 point of movement, so it will calculate the order flow information. If you given it as a 3, for every 3 point or 3 price level, it will calculate the order flow information. So I hope this point is clear. Sorry. So right now, as you can see that we are seeing a buying volumes at the lower level, all right, in terms of the crude oil. So break of this particular level, the day highs break of this particular level can bring the momentum in crude oil. So that is the use case of footprint. So if this particular information is clear to you, play pulse please about market pulse. Okay, I'll get to that point. So if this particular point is clear to you, then comes the big question, how we can use all this information and take the effective decisions. Well, again, I want you to think of the context that we have discussed in the first step. First thing is trend, in which way we want to trade the market. For example, considering presently we are looking the crude oil, all right. So it is very clearly evident. So if you just look at the 30-minute chart for primary trend, assuming that if you are monitoring 15-minute charts for a trade execution and 30-minute chart for trend definition, so in that particular case, it is clearly visible that market is primarily trending in the upward direction. So, and it is what happening after breaking up this high, market is presently trying to move in the upward direction. That means the momentum is still intact. All right. So it makes all sense for us to look for a long trade up until this particular, sorry. Yeah. So I'll mark the level here. Till this particular price level, we can look for a buying opportunity. So when price approaches to this level, it makes sense for us to look for the order flow information in footprint or market pulse. Market pulse also can be used to differentiate the buying and selling orders. So I will also show that particular indicator. All right. So the basic context is that we want to look for a long opportunities in terms of the price, and presently it is breaking the last major resistance, which was at 6,697, and again the momentum is continuing after the breakout candle, which is a good sign, and we want to align in the uptrend. So as you can see, this is basically, okay, let me disable the footprint chart so that you can see the structure. There is one more indicator I want to add. Okay, so that is more helpful in identifying the right swings. There is something called as an absorption indicator. Okay, so if I enable it, the condition for this indicator is straightforward, that if within 2.5 seconds, this much of orders, right now it is 32. If this much of orders got executed within 2.5 seconds, then the software will consider that particular condition as an absorption. What it means to say is that, for example, let's say market is moving in the upward direction and suddenly there is a fall. Okay, so considering this example, okay, some strong sellers might have entered here. Okay, we don't know that they are the kind of institution sellers or something like that, but because of these sellers, price is falling at the lower level. So when price approach to this particular level, okay, assume like 100 of market buy orders got executed within 2.5 seconds. Okay, the question here is, if those are the market buy orders, who consumed those orders? Because for any market buy orders to get executed, there has to be a opponent party in terms of the passive order. So basically there has to be the limit sell order. So definitely this 100 market buy orders got executed, but at the same time it was consumed by those 100 market sell orders. As a result, we are able to see the market is also falling. So that means the condition that met here indicates an absorption. That's exactly the point here. If within 2.5 seconds, time is the differentiating factor here. So basically within 2.5 seconds or within a fraction of seconds, more number of orders getting executed. That's the condition. Software consider it as an absorption, and we can use this absorption indicator to identify the, you know, uh, sorry, right swings. So for example, let's say if I disable it, okay. So as we can see, this is where we are seeing an absorption, and this is where we are seeing an absorption. So this was a buyer's absorption. So basically the one who entered here where the market buy orders was executed, those were consumed. So definitely it's a one of the absorption, and here also we are seeing an absorption. Right now also we are seeing an absorption here. So if you just look at the structure of the BBO indicator, there are so many fluctuations. Wherein, if you look at the absorption, if you combine the absorption indicator, you will be able to see, probable swing highs and swing lows with a clear manner. Because any particular swing, as I said, any particular swing followed by an absorption is a strong swing. So this particular indicator will help us to identify that particular swing. So let me show you an example of a Nifty. Okay. So as you can see here, so I'm giving a manual entry here. So because market is offline now, so I'm giving a 5,000 orders here within 2.5 seconds. If 5,000 orders got executed, show me as an absorption. That's the setting I'm giving to the absorption indicator. As you can see, in most of the cases, all right. So this is where we are seeing an absorption. This is where we are seeing an absorption. So we are getting kind of a swing highs and swing lows, which is more valid comparing to the BBO indicator. All right. So that's where we can use this particular information. Now let's again get back to crude oil. With this particular case, we have an absorption over here. That means the swing, the last day high swing is going to play the critical role. And if we at all want to get into the long trade, we can get into the long trade either here, or if we are little aggressive, we can also get into the earlier trade here. So for basically this zone, we can get into the breakout of this particular zone. We can get into the long trade considering our entire context. So primarily market is trending in the upward direction, hence we are looking for long opportunity, and if this absorption level takes off, then we will get into the long trade. If I hope this particular information is clear to you. All right, just a moment. Okay, so Play Paul is asking, sir, please, about market pulse. Very recently, the market pulse indicators was introduced till 31st Jan. You can try it free if you have a pro version of Bookmap. Just give me a moment. I will show you that. If you visit bookmap.truedata.in, so you will be able to see right now I'm using the Bookmap Pro version. In that, these are the indicators that are included. So every week, every session, I'll be discussing about different indicators, and basically most of the few of the indicators I regularly use that I will anyway discuss, but most of the cases, so these are the indicators that you get from the Bookmap. Cumulative volume delta, point of control, VWAP is the basic indicator. So correlation tracker, absorption indicator, every indicator that you are seeing here caters to the different objectives. So today we have discussed about the absorption indicator, and footprint, and then market pulse is one of the add-on which is very recently introduced. You can try it out using the till 31st Jan. It is available for to try if you are using a pro version. All right. So now market pulse indicator, how to do that, how to activate it. If you go to the configure add-ons, you'll be able to see market pulse. By default, you will not be able to get it. You have to use the Bookmap. Just a moment. Just give me a moment. Just a moment. Yeah. Sorry. Just a moment. I want to show you one of the information. in the website. So just give me a moment, I'm checking out. Yeah. So this is the bookmap, the global version. So bookmap.com English. So if you go to the more, you'll be able to see the knowledge base. And in that, if you go to the add-ons, all right, so you'll be able to see most of the add-ons that are available at the present moment. In that, we are going to market pulse. Okay, so just, yeah, market pulse volume pressure. So this is one of the newly introduced indicators. So to give you a perspective about it, so let me enable that. You have to download the indicator from the website and you have to add it here. Okay, so if I enable it, by default, I know nothing will be available here. You have to create a new algo. There are many more algos they want to introduce here, but at the present moment, volume pressure is one of the algo which is available in market pulse indicator. So for which instrument you want to select? Crude oil. And if you expand the setting, you'll be able to see further settings here. Threshold means, for example, let's say before threshold, we need to understand something called as training period. So in this case, training period indicates nothing but the look back period. So last 5 minutes, if you selected it as 5 minutes, it considers the overall information of the last 5 minutes. And similarly, half life period is basically used to calculate the, just moment, just give me a moment. Yeah. So basically the half life, you can see that half life period is the amount of time in seconds it takes, which takes to decrease by half of the initial value of EMS. So what it means to say is that for every last 5 minutes of training period, okay, for example, for Indian market, more than 30 seconds is the ideal way. So I'm going to keep it as 30 seconds. And basically it means that for every 30 seconds, this particular value will be calculated. So this will help the system to reset for every 30 seconds for the overall period of 5 minutes. So by default, if you keep it lesser, okay, so just give me a moment, I will show you. Just click on this, the play button, you'll be able to see two important information. After that, I will explain that point. So for Indian market, minimum is 30. So let's try to reduce this particular number. If I do it as 1 second, so obviously the fluctuations will be more. Okay, the fluctuation of the indications will be more, as you can see in this white lines. Okay, so that is conjected now. So it's kind of, like we use, right? So basically 5 minute indication will be more comparing to 15-minute indication. That's the only difference. So training period 5 minutes you can keep. If you want more, less number of signals, you can change it to 10 minutes or 15 minutes, but basically the 5 minute makes sense. And the minimum 30 second is the ideal value for Indian markets. Why? Because if I click on apply, now let's look into the same example. Don't worry what this particular information is all about, so I'll explain that. So we will be able to see the difference, clear difference between the volume pressures. Okay, so what exactly these lines are? Nothing but basically you can see here, just a moment, buyers percentage, sellers percentage. So first thing is that it looks back last 5 minutes, every 30 seconds it resets the value. And with that particular case, you can clearly see that this is the percentage of buyers, this is the percentage line of sellers. So for example, last 5 minutes, okay, assume 100 numbers is the average volume. Okay, 100 numbers is the average volume which is executed at the buyer side, or assume the total volume. Okay, so in that particular case, whenever there is one party hitting this particular number, okay, so for example 100, if you are keeping a threshold 70, so last 5 minute average order is 100 and threshold is 70, that means 70 is the threshold value. At any given point of time, either one party, buyer or seller, hits this 70 orders again, then that particular condition will be considered as a volume pressure. So it helps, the market pulse indicator helps us to monitor and observe the volume pressure that are happening with respect to the buyers and sellers. Okay, the question is how we can use this information. Right now you can see this is a live tick of the this. Okay, let me increase the size. So this is the live tick of the market pulse indicator, okay, dashboard. And in that case, we will be able to see, you can clearly see here, this is the threshold. Okay, just a moment. Okay, follow my cursor. So here, this white line is the threshold. So the last 5-minute average order is somewhere 268. This algo will be automatically adjusted to the present dynamics of the market. So if the volumes, for example, next someone hits more than 268, so average order will be more, right? So in that particular case, this threshold will be automatically adjusted. So now for given movement at any given point of time, if someone hits 70% of the 268 order, then the signal will be popped out here, which will be showed as a red. Okay, so this red indicates the indication of the volume pressure in terms of the selling side. The green indicates the volume pressure from the buyer side. Okay, how we can use this information is that similar to absorption, but the way that it appears is something different. So let me show you right now. It's a better example to explain you. So basically here we are seeing more of the market sell orders. Okay, and you can see here we are hitting the pressure, is the price pressure is hitting basically by the market sell orders. But if you closely observe here, there is no presence or there is no pressure from the buyers. Okay, that means the sellers who are entering here without any pressure from the buyers may get into the trap. That's the basic idea of the entire information. Though this information, this particular information, if it is happening at any specific key level, for example, assume, okay, this is a hypothetical example, assume this is a support level and we are getting this information, we are hitting the volume pressure from the market sellers but not the buyers. Okay, so only one player is active but price is reverting back, so price is moving in the opposite direction. That's a clear indication of the seller's trap. I hope this is clear. Similar way it goes with the market buy orders as well. So just a moment. If we are seeing more of the market buy orders but there is no presence of the market sell orders in terms of the volume pressure, then the possibility of these buyers getting into the trap is quite high. If it is happening, especially if it is happening at any specific price levels, then the significance of the signal increases more. I hope this is clear. This is about the market pulse indicator. So this is how we can use the information. So today I have discussed about a few of the indicators that are available. So one is of that is basically BBO indicator and volume dots, cumulative volume delta. Well, how we can use the cumulative volume delta? So basically cumulative volume delta also can be used to monitor the overall price behavior, and also we can relate the volume behavior as well here. So as I said, as long as it trends in the downward direction and also price is moving in the downward direction, that clearly indicates that there is a relation. Okay, there is a relation between the volumes, the aggressiveness in the volumes, basically market sell orders, and the price behavior. But sorry, but if there is a non-correlation, for example, market is moving in downward direction wherein cumulative volume delta is increasing, the possibility of these sellers, getting into the trap is quite high. That's how we can use the cumulative volume delta information. So I hope this is clear. So today we have discussed about this session will be available after this particular session also, you can watch this. So basically today we have discussed about the context, and then we discussed about how we can get into a certain framework, and then we discussed about the overall order flow information, footprint information, and also cumulative volume delta. So few of the instruments, even market pulse also we have discussed today. So if you have any particular questions with respect to the information that I have shared so far, please feel free to ask them in the chat section. So I'm open to question now. If you have any particular question, feel free to ask. So again, there is a more of seller's presence here. So with that sense, this particular level is going to very critical now. So this is where we saw the maximum volumes at 6675. So price should sustain above this particular level. So that's very important. If that is not happening, then the possibility of just a moment. Yeah. So possibility of this buyers getting into trap is quite high. So in that particular case, it indicates a false break, right? So basically the false break of last resistance. So at any given point of time, it should not close below this particular level. At the same time, this is also one of the wonderful way or opportunity for us to look for the long trade, not immediately, but break of last high, which is very much essential. For that, this particular information is giving a validation. So please feel free to ask any questions. If you have any questions, you can use the chat option and comment the question. Always understand, combine the context, the framework, which will help you. Just a moment. Which will help you to filter out the right trades. Most of the cases you will not end up taking unnecessary trades when you have the context in the place. That's why having the right framework is the first step, and then last step, when you are getting into the trade, then definitely the order flow information will be very much useful in order to understand the order behavior behind the price action. Okay, let's add on that. And also this market pulse indicator will give the sound alert as well. Whenever there is a pressure, this gives the volumes as well. So you can see that you can change it from here. Right now you are seeing there is a buyer's buyer pressure, and hence we are getting yeah, there is more of a selling volume. So as you can see, this 32 is going to change. Okay, so right now it is giving a constant alert, but after a certain point of time this threshold will be adjusted. So basically it is falling below 32. So the pressure that we are seeing is has reduced. All right. Any particular questions on it? Earlier it was two, somewhere around 268, right? Because for that 5 minute there was more of orders got executed at this particular level. Let's try to monitor the price and see what happens. So at the present moment, we don't want this price to be broken, and break of this particular level can, it is one of the way to get into the long trade. So that's how we can use this information. See, we can see that buyers are hitting now. Buying pressure is happening at the moment. Again, buyers are again entering into the market. I hope you are able to see the I hope you are able to listen to the alerts that are happening. So at the moment, it is giving an alert in terms of the buyers, so that you can change here which volume that you want. You can change that from the setting. More of the market buy orders getting executed, and pressure is presently at the buyer side. Volume pressure. Meanwhile, if you have any particular question, feel free to ask them in the comment, so I'll be able to answer it. And most importantly, try to attend the sessions on every week so that you'll be able to learn according to the dynamics of the market, because for today's discussion is different, for next week discussion will be different, because market is dynamic, right? So definitely we'll be learning the dynamic stuff. So try to attend all the sessions so that you will get the most of the benefit from the sessions. And most importantly, if you have any friends who are interested to learn this advanced concept, so feel free to, or please share the link of the sessions to them. So if you follow the channel, you will be able to get the notification from our end whenever we plan a new session. All right. So as you can see, the market pulse indicator is changing the volume. Okay, so whenever there is a change in the volumes, automatically it will adjust. So on every note, so if there is a threshold hit, so it basically means that something is happening considering the last 5 minutes. If you don't want 5 minutes, you can change that here and give the apply. That's how we can use this. If you are from Indian markets, so if you want to trade it from Indian markets, you need to visit bookmap.truedata.in. All right. So from this, you'll be able to get the subscriptions. So you can check this after the session. Well, so that's it from my end. I hope today's session added value to you, and keep attending all the sessions so that you'll be able to update your knowledge on timely basis. And also please share this information with your friends who are interested to learn about the same thing. So the information that I have shared so far is for educational purpose only. It is not for any buy or sell recommendation. Please consider it as a research and basically the educational information. Any decision that you take with respect to investment and trading are subject to market risk. So that's it. See you in the next session. Until then, take care. Bye bye. Jai Hind.